Welcome to the Deep Dive. You're here because you want to get smart, fast, on something important, without getting totally lost in the weeds. We get it. Today, we're diving into the world of fintech, that's financial technology. It's a real game changer in how we all deal with money.
Absolutely.
And this is actually the first stop on a multi-part journey we're taking into this whole area.
Right. Think of this as like Fintech 101. Our mission today is basically to give you a solid grip on what fintech actually is.
Okay.
Where it came from and its history is, well, it's longer and maybe more surprising than you think.
Right.
Why it's so important now, the impact it's having everywhere, the really exciting innovations happening, and just the sheer scale of its growth and demand worldwide.
You look a lot.
It is, but we've looked at a ton of information to sort of boil it down to what you really need to know. Simple, straightforward.
Perfect. Okay, let's unpack this.
Okay.
What exactly is fintech? We hear the term constantly. What's the plain English definition?
No. Okay. At its absolute heart, fintech is simply using technology to make financial services better.
Better how?
Think faster, cheaper, and just easier to use for everyone involved.
Okay. Can you give us some really basic examples, something that makes it click?
Absolutely. That mobile banking app you probably have on your phone, to check your balance or maybe transfer some money.
Yeah, use it all the time.
That's fintech right there. Or digital payment systems like PayPal. They let you pay for stuff online without typing in your bank details every single time.
Got it. PayPal, yeah.
That's another big one. And even things like cryptocurrencies, Bitcoin and others, they operate within this whole fintech space too.
So it's really about using tech to fix some of the headaches we've maybe all experienced with traditional banking.
Exactly that. Fintech often tackles problems like, how slow or expensive it can be to move money around.
Definitely.
Or the fact that historically, lots of people around the world just haven't had access to banks at all.
Right. The unbanked population.
Precisely. And let's be honest, some of the old processes were just pretty clunky and, well, not very user-friendly.
You're so right. I mean, I remember trying to split bills with friends before things like Venmo came along. What a hassle.
Fintech definitely swooped in there with some much-needed solutions.
Okay.
And because these fintech companies often rely heavily on software and they don't always need, physical branches everywhere.
Less overhead.
Exactly. Less physical infrastructure. They can often operate at a lower cost. And ideally, that efficiency translates into benefits for you, the user.
Like lower fees.
Lower fees, maybe better interest rates, things like that.
Okay. And it's not just about doing the same old stuff cheaper. I've heard fintech described as unbundling bank services. What's the big deal there?
That's a great point. So think of a traditional bank. It offers a whole big toolbox of financial services, right? Loans, accounts, investing, insurance.
All under one roof.
Right. Fintech often comes along and takes maybe just one specific tool out of that box, let's say, just lending or just investing. And they create a dedicated app or platform, often really user-friendly, just for that one thing.
So specialists instead of generalists.
Kind of. So instead of one big institution trying to do everything, you get these specialists focusing on doing maybe one thing exceptionally well, and that can lead to more choice for you and sometimes better services too.
Okay. That makes a lot of sense.
Okay.
Now, you mentioned the history. The idea that fintech has been around for over a century, that really threw me. I always pictured it as, very recent thing, apps and stuff.
Yeah, it definitely feels new with all the apps and digital innovation we see today, but the groundwork, the foundations were laid much, much earlier. We can actually look at the history in sort of stages.
All right, let's do it. Start us off with Fintech 1.0, building the infrastructure, you called it. What were the key things happening back then?
So this period was roughly 1866 to 1967. Just imagine a world where sending money across, say, the Atlantic was incredibly slow, physically cumbersome.
Right, ships and mail.
Exactly. Then, in 1866, the first successful transatlantic telegraph cable was laid. This was monumental. It allowed the very first long-distance electronic transfers of funds.
Wow. Electronic back then.
Yeah. Think about going from snail mail carrying financial instructions to something near instant, relatively speaking, across continents. That was huge for international finance.
That is a massive leap in efficiency. I can see that.
Absolutely revolutionary for its time. Then, a bit later, in 1918, the U.S. Federal Reserve launched Fedwire.
Fedwire.
Yeah, it was an early electronic payment system, but operating within the U.S. banking system. So these kinds of foundational technologies were absolutely crucial for building the interconnected global financial network we kind of take for granted today.
So that era was all about creating the basic plumbing, the systems.
Yeah.
What changed in Fintech 2.0? This sounds like when things might start looking a bit more familiar.
Right. Fintech 2.0, let's say from 1967 up to around 2008, this is when the digital revolution really started to hit finance directly. A really key moment was 1967.
What happened then?
The first ATM, Barclays Bank, installed it in London. Suddenly, for the first time ever, people could get cash 24/7 without needing to go inside a bank during its specific opening hours.
Ah, the cash machine. That must have felt like magic back then.
It really must have. Huge convenience factor. Then, jump to the 1970s, we saw the launch of NASDAQ, the first completely digital stock exchange. No physical trading floor needed for it.
Right. And SWIFT.
And the SWIFT network, exactly, in 1973. SWIFT basically standardized how banks all over the world communicated with each other about international payments. It made global transactions much faster and more reliable.
Okay, so we've got cash access, digital stock trading, better bank communication. What about like day-to-day banking for regular people?
Well, the 1980s saw banks starting to use those big mainframe computers more heavily to process transactions internally, and they started offering very basic online banking services. Think clunky terminals, maybe even dial-up connections or phone banking. Pretty rudimentary by today's standards.
Big imagine.
And then, towards the end of this era, 1998, a company most of us definitely know now was founded. PayPal.
PayPal again.
Yeah. And that really hinted at the future of online payments, just as the internet was starting to become really mainstream.
Okay, so it sounds like during this Fintech 2.0 phase, it was mostly the big established banks themselves driving the technological changes, right?
Yeah.
Using tech to improve their own stuff.
Exactly. Fintech 2.0 was largely about the traditional financial institutions adopting digital tools to, enhance their existing services, make things a bit more efficient. But the next phase, that brought a completely different dynamic into play.
Which takes us neatly to Fintech 3.0. You dated this from 2008 to basically now. This is when it feels like Fintech just exploded into everyone's awareness. What was the spark?
Yeah, this is the era most people think of. Two massive events really converged around 2008. First, the global financial crisis.
Right, that shook everything up.
It really damaged public trust in the traditional banking system. And second, the widespread adoption of smartphones. Suddenly, almost everyone had a powerful computer in their pocket.
So you had distrust in the old system, plus the technology was suddenly everywhere. A perfect storm.
Precisely. It created this huge opening for new players, for startups to emerge. People were actively looking for alternatives, and the tech was there to deliver them.
Makes sense.
Then, in 2009, Bitcoin was introduced. That was revolutionary in its own way, the whole concept of a decentralized digital currency, not controlled by any central bank or government.
Right, start of crypto.
Yep. And then through the 2010s, we just saw this massive surge, an explosion of fintech startups. They were tackling everything: lending, investing, insurance, payments, you name it.
And this is when we started hearing terms like open banking and banking as a service, right? What do people need to know about those?
They sound important. They are really important concepts for this era. Open banking, especially in places like Europe where regulations like PSD2 mandated it, basically means banks have to allow authorized third-party fintech apps to access your financial data.
If I give permission, right?
Absolutely, only if you explicitly give permission. They do this through secure connections called APIs. This allows for all sorts of innovative new services apps that can analyze your spending across different accounts, find you better deals on loans or savings, that kind of thing.
Okay, so it opens up the data. What about banking as a service, or BOSS?
BOSS essentially lets fintech startups or even non-financial companies build their own digital banking products relatively quickly. They do this by using the existing infrastructure and, crucially, the banking licenses of established banks.
So they don't need to get their own expensive banking license.
Exactly. It lowers the barrier to entry dramatically. It lets new companies get into the market and offer specialized financial services much faster.
Okay, got it. So Fintech 3.0 sounds like it was really about these new, often smaller companies challenging the traditional financial world using new tech and regulations. But I think you mentioned a Fintech 3.5 earlier. What's the difference there?
Yeah, Fintech 3.5, it's often seen as starting around, say, 2014, and it's still ongoing. It highlights a really important global shift that happened within that broader 3.0 era.
A global shift. How so?
Wow, that initial wave of startup-led fintech innovation was heavily concentrated in Western markets, US, UK, Europe.
Right.
Fintech 3.5 recognizes the incredible growth and, frankly, leadership of fintech that emerged in developing economies, particularly across Asia, Africa, and Latin America.
So it stopped being just a Western thing.
Absolutely. It became a truly global phenomenon. You look at countries like China and India. By 2019, they had astonishingly high rates of fintech adoption. Something like 87% of digitally active consumers were using fintech services.
With 87%. Wow.
Yeah. And in many of these markets, they didn't just adopt fintech alongside traditional banks. In many ways, they leapfrogged.
Leapfrogged, meaning they skipped steps.
Kind of. Think about China's rapid shift. They went pretty much directly from cash to mobile payments like Alipay and WeChat Pay, largely bypassing the widespread use of credit cards that was common in the West.
That is a completely different path compared to, say, the US or Europe.
Totally different trajectory. In many emerging economies where the traditional banking infrastructure was maybe less developed or accessible to everyone,
Right.
people readily, even eagerly, embraced these new financial solutions delivered straight to their mobile phones.
That met a real need.
A huge need. And financial inclusion, the idea of bringing financial services to everyone, including those left out before, became a major driving force. You saw the rise of mobile money platforms, super apps combining payments, messaging, shopping, all in one place, often tailored very specifically to local needs.
Okay. So fintech isn't just a Silicon Valley or London trend. It's genuinely global, reshaping how people everywhere manage their money.
Yeah.
That history is fascinating. Now that we have a better handle on where it came from, let's talk more about the impact it's having today. We've touched on some bits, but what are the key ways fintech is changing the financial landscape?
Well, as we've kind of discussed, fintech is fundamentally a disruptor, right?
Yeah.
It challenges the established ways that banks and other traditional financial institutions operate. It forces them, really, to innovate, to become more customer-focused. It's injected this real sense of dynamism into a sector that, let's face it, was often seen as pretty slow-moving or traditional.
Keeps them on their toes.
Definitely. And a really big term you hear constantly in the fintech world is financial inclusion. How is fintech actually making a difference in bringing more people into the system?
Right, that seems huge.
It is arguably one of its most significant impacts. Fintech has been absolutely crucial in extending access to financial services to populations that were historically unbanked or underserved.
Do we know how many people we're talking about?
Well, estimates from the late 2010s suggested around 1.7 billion adults globally didn't have a formal bank account. That's a massive number.
Huge.
Fintech, through things like mobile money accounts that don't require a traditional bank relationship, digital wallets, lower-cost service models enabled by tech, has helped dramatically reduce this number. Some estimates suggest around 1.2 billion previously unbanked adults gained access to some form of financial services in the last decade or so, largely thanks to these fintech innovations.
Wow, 1.2 billion people. That's incredible. It really shows the power of this technology to tackle fundamental global issues.
It really does.
What about the sort of mechanics of finance? Is fintech actually making things run better, more efficiently?
Absolutely. You compare it to traditional banking with its reliance on physical branches, large back-office operations, often running on older legacy technology systems.
Just sometimes feels like it.
Fintech companies, with their digital-first approach, using modern cloud technology automation, they can often deliver services much more efficiently.
How does that show up for us?
Well, it means lower operational costs for them, which can translate to faster processing times for us. Think about applying for a loan online and getting a decision in minutes, sometimes powered by AI algorithms.
Instead of weeks.
Exactly. And ultimately, it's driving a trend towards lower fees for consumers across the board as competition heats up.
And I've definitely noticed, just as a customer myself, our expectations have totally changed, haven't they? We expect instant access, everything on our phones, available 24/7. Is fintech driving that shift?
Oh, without a doubt. Fintech has really raised the bar for what we expect in terms of user experience from financial services.
Yeah.
We now demand seamless, intuitive interfaces, instant access to our information, and the ability to transact anytime, anywhere, right? Round-the-clock availability.
Totally.
And this has put immense pressure on the traditional banks and insurance companies. They've had to invest heavily in their own digital offerings just to try and keep up, just to remain competitive. Fintech has really forced the entire industry to become much more centered around the user's needs and convenience.
It's interesting that you also mentioned fintech can be a collaborator, not just purely a competitor. It definitely started as a disruptor.
Right.
But is the relationship changing? Are they working with the traditional players more now?
That's a really key evolution we're seeing. While, sure, some fintechs might still have the ambition to completely replace traditional banks,
Right.
many others have realized there are significant benefits to partnership. It goes both ways.
How so?
Well, fintechs might rely on established banks for things like regulatory compliance, which is complex and expensive, or maybe access to a large existing customer base. And on the flip side, the banks can leverage the agility, the innovative technologies, and maybe the different brand appeal of fintechs to improve their own services or reach new customer segments they were struggling to connect with.
So kind of a win-win sometimes.
It's becoming a much more symbiotic relationship in many areas. You could almost think of some fintechs acting like external R&D labs for the big banks. They develop cool new tech or services, prove they work, and then the banks might partner with them, invest in them, or even acquire them to scale those ideas up. Open banking initiatives we talked about are a perfect example of this kind of collaboration being built into the system.
So summing up the impact, it's disruptive, it drives inclusion, boosts efficiency, changes our expectations, and increasingly it collaborates with the old guard too. Far-reaching effects.
Definitely.
Now let's get a snapshot of where things stand right now. What does the current demand and growth for fintech look like around the world? Is it still booming?
Oh, the numbers are still really compelling. The global fintech market is projected to be absolutely enormous. Forecasts vary a bit, of course, but we're looking at exceeding $340 billion globally in 2025.
Wow.
And some forecasts suggest it could reach a staggering $1.15 trillion by 2032. That's just massive expansion still ahead.
$1 trillion. Where are we seeing the most exciting activity, the biggest growth spurts right now?
Well, Southeast Asia is a particularly dynamic and exciting market. You've got this combination of factors: a young, very tech-savvy population, incredibly high mobile phone penetration rates.
Everyone's got a smartphone.
Pretty much. And
Yeah.
still, a significant number of people who are unbanked or underbanked by traditional means. This just creates this huge, this massive opportunity for fintech adoption.
What kind of fintech is leading there?
Digital payments are really leading the charge. Widespread use of mobile wallets, QR code payment systems, it's become very common very quickly. And interestingly, even with some cooling in global venture capital recently, fintech funding in the ASEAN region, Southeast Asia, has remained quite robust. Investors clearly still see huge potential there.
Okay, Southeast Asia is hot. What about more established economies like the U.S. and Europe? How's it looking there?
Yeah, in the U.S., you'd say fintech is a more mature market now. A large percentage of the population already has access to traditional banking services.
Right.
So the focus for fintech there is often more on enhancing convenience, improving the user experience, maybe catering to specific niche markets that weren't well served before. You see this blend of really intense competition between different fintech startups, but also, as we mentioned, increasing collaboration and partnerships between fintechs and the big incumbent banks.
And Europe.
Europe also has a very strong, very vibrant fintech ecosystem. It's been fueled quite a bit by progressive regulations like open banking, PSD2 that we talked about.
Right.
And also a big push for greater cross-border financial integration within the EU. All of this is leading to, generally, a more competitive and more consumer-friendly banking landscape overall. Lots of innovation happening there, too.
Are there any specific countries that are really standing out right now for their rapid fintech growth?
Yeah.
Maybe catching people's attention?
Absolutely, several. Pakistan is a really interesting emerging market to watch. They're tackling historically low levels of financial inclusion using mobile wallets and a relatively new government-backed instant payment system called RAST, seeing significant uptake.
Okay.
India, of course, is just a massive fintech success story. It's been hugely driven by their public digital infrastructure, things like the Aadhaar identity system and especially UPI, the Unified Payments Interface.
UPI, yeah, you hear about that a lot.
The volume of digital transactions happening over UPI is just mind-boggling, billions per month. It's fundamentally changed payments in India.
Incredible scale. Any others?
Bangladesh has seen tremendous growth. Primarily through mobile financial services, MFS, like Bcash, they've achieved incredibly high mobile money usage, really transforming financial access for millions. Even Nepal, which has, challenging geography. Exactly. It's seen a really rapid increase in the adoption of digital wallets and mobile banking, especially accelerated by the COVID-19 pandemic. It's making finance much more accessible there.
It's fascinating how different regions are leveraging fintech based on their unique circumstances and needs. What about, say, Africa or the Middle East?
Nigeria is widely seen as a real leader in fintech across the African continent. It attracts significant venture capital funding and is tackling both the need for modern digital services for the banked population and driving greater financial inclusion through things like mobile wallets and extensive agent banking networks that reach underserved rural communities.
Agent banking.
Yeah, using local shops or individuals as agents to provide basic financial services like cash in, cash out. It's crucial in areas without bank branches or ATMs.
Got it. And the Middle East.
Singapore, while technically Southeast Asia, deserves mention as a major global fintech hub. Proactive government support, lots of funding, innovation across the board, very high cashless payment adoption. Then in the Middle East, the UAE, particularly Dubai, is rapidly emerging as a key fintech center. They're attracting lots of startups, focusing heavily on areas like digital assets, blockchain, and crypto.
And we can't really talk global fintech without mentioning China, right? They were kind of early movers in mobile payments.
Absolutely. China's fintech journey is quite unique. As we touched on, it largely grew outside the traditional state-owned banking system, really spearheaded by the giant tech companies like Alibaba and Tencent.
And Group WeChat Pay.
Exactly. And they achieve those incredibly high adoption rates in mobile payments very quickly, fundamentally changing consumer behavior. Even Russia, despite recent sanctions impacting international connections, has a surprisingly high level of domestic fintech adoption and very sophisticated super apps offered by its major banks, integrating banking with tons of other services.
Wow. It really paints this picture of a truly global movement, but with lots of local flavors and different paths being taken. Okay, so to wrap up this first exploration, let's look right at the cutting edge. What kind of innovation should we be watching out for in fintech right now around the world?
The pace of innovation just doesn't seem to slow down. A huge area is artificial intelligence, AI, and machine learning.
How's that being used?
In increasingly sophisticated ways, for much smarter, more nuanced credit scoring, allowing lending to people who might have been overlooked by traditional models, for much faster and more accurate fraud detection, which is a constant battle, and even for providing personalized financial advice through robo-advisors or chatbots tailored to your specific situation.
Okay, AI is big. What else?
Blockchain technology and cryptocurrencies continue to evolve, obviously. Beyond just Bitcoin, there's a lot of work on using blockchain for potentially faster, cheaper cross-border payments and the whole growing area of decentralized finance, or DeFi.
Right, DeFi.
Open banking, as we discussed, continues to act as this catalyst, this platform, enabling more innovation by allowing different financial services to securely connect and share data. And that banking as a service model is making it quicker and easier than ever for new companies to launch their own digital banking offerings.
And what about some of the innovations that maybe we, as everyday users, are encountering more directly?
Well, buy now, pay later, or BNPL services have become incredibly popular, especially for online shopping. You see them everywhere at checkout now.
Yep. Klarna, Afterpay.
Exactly. We're also seeing the continued growth and maturation of neobanks, those digital-only banks that operate entirely online, no physical branches. They're constantly adding new features.
Okay. Any other buzzwords we should know?
RegTech is an interesting one. That's regulatory technology. It focuses on using tech to automate and streamline the burdensome but necessary tasks of regulatory compliance for financial institutions. Makes things more efficient and hopefully reduces errors.
Saves banks money, I guess.
Potentially. And then there are whole related fields branching out, like InsurTech, applying similar tech principles to the insurance industry. Embedded finance is a big one, where financial services like payments or lending are seamlessly integrated into non-financial platforms or apps. Think ordering food and paying within the app, or getting financing directly on an e-commerce site.
So finance disappears into the background.
Kind of, yeah, making it more convenient. And finally, something governments are looking at. Central bank digital currencies, or CBDCs. Many central banks around the world are researching or piloting digital versions of their national currency. That could be a major shift down the line.
Lots happening on the innovation front. It's clear fintech is a constantly evolving, incredibly dynamic field. So just to bring together what we've covered in this first deep dive.
Yeah, I think the key takeaway is that fintech is far more than just, a buzzword or a passing trend. It's a really powerful and transformative force.
Right.
It has this rich, surprisingly long history. It's having a significant and still growing global impact, especially on making financial services more accessible to more people, making things more efficient. And it's fueled by continuous innovation, which is driving that substantial growth and demand we see all across the planet.
And for those of you listening who are maybe just starting to explore fintech or weren't quite sure what it was all about, we really hope this deep dive has given you a solid foundation, a good starting point to build on.
Absolutely. And this was just the first step, really just scratching the surface. In our next deep dive in the series, we'll be zooming in much closer on some of these specific areas and technologies within fintech, maybe looking deeper at AI or DeFi or payments. So definitely join us for that.
We hope you will. And maybe as you go about your day, think about this. With all these exciting fintech developments happening everywhere, how might they continue to shape your own financial life? And maybe even the broader economy. And maybe think about what other long-standing financial problems or hassles you've encountered. Might they be ripe for a clever fintech solution next? It's definitely something worth considering. Thanks for diving deep with us.